Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Thursday, September 26, 2013. If you are a radio listener of Radio Newark and wish to watch this broadcast, tune in at www.catex.com. Richard Ward has done it again. The outgoing CEO of Lloyd's has again produced a profit. It's a little bit down. It's actually down about 9.8% from last year. However, that's due to poor investment returns. Lloyd's reported a profit of 1.38 billion pounds, about 2.2 billion US for the first 6 months of 2013. That's down about $1.5 billion pounds from $1.5 billion pounds from the same period last year. So it's about 200 million pounds less. Meanwhile, the all-important ratios, insofar as loss ratios, actually went down. They fell to 86.9% from 88.7%. Translation, Lloyd's is much more efficient, paying out less claims. It's been a relatively benign catastrophe year for the reinsurance industry. Insurers have been nailed by the Federal Reserve's plan to scale back debt purchases. This has caused Treasury yields to rise, eroding the value of their short-term investments. They did see a premium increase of about 5%, up to about 15.5 billion pounds. So all in all, pretty good news for Lloyd's. Axis Capital now is the latest to join what is becoming a parade of new syndicates coming into Lloyd's. They've been approved in principle to launch a $180 million insurance-focused Lloyd's syndicate to begin writing on January 1st of next year. It's going to be Syndicate 1686. It's going to underwrite a diversified and balanced book of specialist classes, including marine, energy, aviation, terrorism, property, and professional indemnity. Axis said that they're going to transfer an existing portfolio of business from its insurance operations in Bermuda, London, and Dublin. Meanwhile, this parade of new syndicates coming into Lloyd, clearly indicating the intention of Lloyd's to expand capacity, as well as publicly stated rumors in the marketplace from the ratings agencies that Lloyd's could be in for a ratings upgrade, has certain people worried. One of them is Pat Ryan, former Aon founder, who is now the CEO of Ryan Specialty Group, who had bought into the Jubilee Syndicate, which was recently purchased, in fact, by another syndicate, is very interested in having a diverse market. Mr. Ryan, in a speech last night in London, indicated that if Lloyd's goes up to a AA rating, they're currently at an A rating, his concern is they're going to obtain an even greater share of global underwriting business, pressuring competitors. Ryan said there are still buyers who say they only want AA rated paper behind their risks, and they are prepared to pay a premium for the added security. Translation, it's going to cut down on competition. The Canadian banking regulator is urging insurers to sell cat bonds for the first time to cut the risk of natural disasters. This is because of the gigantic Alberta flood loss in June of earlier this year, when Calgary was essentially whacked. Shiv Kumar, who's the managing director of structured finance at Goldman Sachs, who's a bit of a cat bond expert, says, "I have not seen a deal in the cat bond market that's focused on purely Canadian risk. The market is very ready for it." No kidding, there's a concentration of California quake and East Coast hurricane risk in the cat bond market. The modeling firm Equicat is estimating that Hurricane Manuel's 2 landfalls in Mexico near Acapulco earlier this month may have caused insured losses of up to $200 million. Meanwhile, JP Chase is apparently in talks with the U.S. government to settle federal and state mortgage probes for, get this, $11 billion. This is according to CNBC. The sum could include $7 billion in cash and $4 billion for consumers. The $11 billion amount could change, apparently. The discussions include the U.S. Department of Justice, the SEC, the U.S. Department of Housing and Urban Development, and the New York Attorney General. JP Morgan is hoping to put the issue behind them. The bank has been on the hot plate insofar as these mortgage issues for some time. The U.S. Geological Survey reported a 7.0 earthquake off the coast of central Peru yesterday. No damage or injuries or tsunami. And yesterday, in New York at the New York Stock Exchange, Japanese Prime Minister Shinzo Abe made a very interesting speech. He compared the career of the fictional Wall Street titan turned criminal Gordon Gekko with Japan's economic resurgence. The speech was actually rather diverse. It touched on everything from hot dogs and sushi to baseball and the U.S. rock band Metallica. It repeatedly mentioned Gordon Gekko in the 1987 film Wall Street. Abe said, "Today I have come to tell you that Japan will once again be a country where there is money to be made, and that just as Gordon Gekko made a comeback in the financial world, so too can we now say that Japan is back." Mr. Abe also mentioned the Yankees baseball player Ichiro Suzuki, Japan's super efficient bullet trains, and he finished the speech with a reference to the band Metallica's song Enter Sandman. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you tomorrow.